happening with rates? We've seen they've gone up. What's the latest on where we're seeing mortgage rates right now?
Yeah, Dan. So, I mean, as we all know, we had a record 2 years of just super low rates. And a few weeks ago, they jumped up. Everybody kind of, got scared and nervous, obviously to be expected. But, as of this week, they've actually stabilized a little. So most of, actually the 30-year average is right at 5.5 right now. So a lot of people, that's one of the first questions they ask is, hey, what are rates doing? Obviously it's, there's a lot of loan programs out there. It depends on credit. There's a lot of variables to that, but I would say an average, we're probably still mid to low fives, which, I kind of put things in perspective of my parents' generation. My dad always tells a story. Hey, when I bought my first house, it was 19% interest, right? Yeah. So, yes, we're used to low rates for a long time, but when we look at the history of where mortgage rates have been, it's still a really great rate. We're in the fives. So thankfully we're not where it used to be a long time ago, for sure.
Yeah. It's still 5.5% is still, to put that in perspective, is still amazing. I mean, it really is, yeah. We were in a ridiculously low, probably for too long, an environment where rates were just crazy low. But if you look at a graph over the last 80, 100 years, 5.5%, we're still sitting really pretty. And that's why I still think it's a great time for buyers out there to capitalize on that. If you lock that in for 30 years, you're in really good shape. Because right now you can literally, which sometimes I don't understand why. I mean, some people want to pay cash, and that's fine to not have debt, but you can get Treasury I bond for 9.6%, right? Where the government pays you guaranteed that amount of money, and then you got a 5.5%. I mean, that's a good spread. You can save your money and have that rate. So 5.5% is kind of average right now. Any particular programs you're seeing out there that are standouts that you're seeing more of your clients kind of gravitate to right now?
Yeah. So, I mean, in a seller's market, I'm going to say conventional loan program is probably going to be the most competitive, right? So as a seller, you have, how many offers do you think an average seller has right now, Dan? Are you thinking like 10 is probably a good number to say?
Yeah, I mean, we had a home that was listed for $250,000 a couple weeks ago. We got 14 offers.
Okay, so yeah, I figured it was somewhere between 10 and 15. So I try to think in a seller's perspective, because a conventional loan is going to be the less strict when it comes to doing an appraisal, right? And so that's really standard. If you have 14 offers in front of you, are you going to look at ones that maybe have a more strict loan process or underwriting guidelines and appraisal? And so I would say if we can go conventional, I'm going to really convince my client to go conventional. And I think you'd probably agree with that. So, there's different loan programs we do. We do FHA, USDA, VA, conventional. I do all of them. So I'm always happy to really talk through different options. And that's where a lender, it's really good for me to understand the background and what my client's goals are. So then I can really say, hey, this is a loan program I recommend for you, and here's why. So yeah, I definitely would say conventional is probably the one that most of my clients go towards. Yeah.
And you mentioned the A word, the appraisal. Tell us what you're seeing with that right now. Are they keeping up? What's going on?
I have a lot that are coming in great as far as appraises for what we thought, but I have had some recently where it's come in low. So we have an appraisal gap, and that's really unique to this time with the real estate market. And so I always try to have that conversation with my clients and really make them understand, hey, if this house is listed at 250 and you're offering 260, right? What happens when it appraises for 260? Or even 250. We try to walk through those scenarios to saying, hey, if it comes in low, like you're basically saying on paper that you agree to bring that $10,000 difference to closing. And so it's having that informed conversation on the front end of, hey, this is what I'm expecting for down payment, closing costs, setting up escrow accounts, plus the appraisal gap. So really having the conversation up front. And one thing I do want to mention, Dan, is, as a lender, I'm able to help with lender credit. So a lot of people don't understand that. So if we're in a situation where maybe an appraisal comes in low, we have options. It's not a cut and dry, sorry, you can't move forward with the loan. It very much is kind of sitting down and saying, okay, you have X amount, maybe you need help with $2,000 in closing costs. And so we can work that out. Whereas a lender, I can help give that $2,000 closing credit and we just move on. So some people aren't aware of that, because as you can tell, this market, you're just not going to really be able to go to the seller and say, hey, I need $2,000 in closing costs.
Right.
Like that's not happening, right?
No, not right now.
Yeah. So I would say, as from y'all's perspective on your team, and even as a lender, it's just always good to have that conversation on an appraisal gap, before you even make the offer, just making sure they understand what that looks like.